Good day, everyone. Trust we all are doing good. I'm Tio, and welcome to my day 35 video of the 100 Days of Technical Analysis Challenge. Today I'll be looking at NZD card from a bigger perspective. So, let's dive right into it. So, from the monthly time frame, what do I see? Um, First, let me talk about this whole structure. Yes, this whole structure. Um, what I see on the monthly time frame is very common in the financial markets. Let's put it that way. Here we have an impulse to the upside, and here we have a correction. And the market moves in three ways: impulse, correction, and impulse. So, me understanding the concept that the financial markets moves in this pattern, I'll be expecting an impulsive move to the upside next. So, with that known, I understand where price will be heading to, where price is likely to head to. So I can take this all off my chart and mark out significant areas of structures right now. So dealing with relevance in price. If you look at this area right here, you can see it aligns perfectly with whatever happened in price. It acted as okay, let me mark that out. Let me mark that out. So yeah, right here. So you can see it acted as resistance, support, 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 support. Acted as resistance here. Then what? Price plunged back into it. There is a huge tendency that this should act as support. So taking my box to mark this out. Yes. So we understand the whole movement behind this projection of price. Resistance, support, 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 support. Broke through, came back, acted as resistance. Price broke through again. Now it should act as support based on the whole movement and structure. And also dealing with relevance in price, this relevance right here, this is a W pattern. And in most of my videos, I explain the concept of W pattern. When we have a W pattern formed, price will come back to the net line or move below the net line before we actually have price project to the upside. And the same scenario applies to the M pattern. Price will come back to the net line, then project to the downside. Now, with that known, we can actually understand why we have this bearish candle on the monthly time frame. So it was just a move back below to the what net line or a little bit below the net line. Now, with that understood, I can zoom out a little bit, and right here, we have this trend line or this trend, if I would say, and we can see it acted as resistance. But if I actually ignore this level, wow, okay, it's okay. If I actually take my trend line from this level down to this level to touch price itself, we can see how well price broke through it and came back for a retest. Now, I know some people say, "Oh, I should have picked my trend line from this level or picked it." I really don't care. It's my approach towards the market. So it's my approach towards the market. So I picked my trend line from this level down to this level, and we can see how price broke through, then came back for a retest. Now, what do we expect in price? We expect price to move to the upside. It's all based on probabilities and possibilities. So we expect price to move to the upside. But first, if I throw my fibs on this chart, what do I see? I can see price actually is at the 38.6 fib level, which is a significant and possible reversal zone on the Fibonacci, and also it aligns perfectly with previous structure. So we should actually look for opportunities to go long at this level. Now, I realized I've broken this chart down in a way on the monthly time frame that I can actually be able to derive a bias. And my bias from the monthly time frame or the monthly perspective is to go long. Now let's go to the weekly time frame. So on the weekly time frame now, remember we had a W pattern on the monthly time frame. We had a W pattern on the monthly time frame. And if you do look closely at price right here, this is the major W pattern right here. If you do look closely at price at this level, just this current relevant level, look at this first leg, then second leg, and the retest right here. So we also have a W pattern within the last leg of the W pattern on the monthly time frame, which is what further confluence. And right here, there is a zone right here. Yes. So there's a zone right here, and look at it, acted as resistance, resistance, resistance. Price broke through. We expect it to act as support. Simple. Then now we move on to the daily time frame. Now on the daily time frame, what do I see? If I do look at price from this perspective and I throw my Fibonacci from this swing low to the swing high, we should be able to see that price is actually at a significant Fibonacci level. Yes, at a significant Fibonacci level, which is 61.86 level. So what would I be looking for? I'll be looking for opportunities to go long on NZD card. Now with that known, I can take my Fibonacci off, back to the daily time frame. I can take my Fibonacci off and understand the whole thing, majorly looking for confluences at this area of structure right here. Now, down to the 4 hour time frame, I see this very structure right here. It looks much like a divergence. Now, let me just add my RSI to this chart and let's see if we truly have a divergence. Okay, yes, we have a bullish divergence on this chart. So more confluences to go long, more confluences to go long. Now, like the whole confluence was first the impulse and correction, the zone within a zone, the W pattern within the W pattern, and the general W pattern. So, a huge tendency that we should go long on NZD card because of all the whole confluence does fall in place for a bullish bias. Now, to the 1 hour time frame, which is the last time frame I'll be checking. So, we had an impulse and a correction right here. Impulse to the upside, then a correction right here. So what would I be expecting? I'll be expecting this impulse to be over, then a minor correction before we project to price further. And also looking at this area, yeah, this is a area of structure which price has broken. So it's like further confluence. Price just move up a little bit, then we correct back, and I look to take my opportunity to go long. So that is the confluence behind my sentiment to look for a buy on NZD card. So I can just take this off my chart. Okay. So I can just take the RSI off my chart, and my sentiment is to go long on NZD card to the upside. So my bias is to go long on NZD card. The confluences are the impulse and correction pattern seen on the monthly time frame, the zone within a zone, the W pattern, the W within the W pattern, the divergence, and the impulse on the 1 hour time frame with the correction confirmed. So that is my those are my confluences for going long on NZD card. So if you do have a bias in alignment or not in alignment to mine, please drop it in the comments down below. I'm open to corrections and criticism, and please do like and follow. Thank you.